Hey everybody, Jen Berbas with the Berbas Group in Austin, Texas, coming to you with our January newsletter reviewing the end of year 2025 data. I hope everybody had a really good holiday and New Year's, and we're ready. We're off to the races, actually. Our team has a ton of listings that we're getting ready for the new year. Let's go through some of the data here with you. Total sales in December 2025 are up 5.7% over the previous year. To me, that indicates that November was a little bit busier. I think it's also interesting that pendings in December were down 4% from the previous year, which means our January close data should be a little bit lower. Average days on market is 104, up from 94 last year. And then we're also going to look at the months of inventory. Months of inventory is up to 4.4 months, but this is across the Austin metro area. We're noticing huge differences from neighborhood to neighborhood in months of inventory. So months of inventory is up to 4.4%. But this really requires a little bit more thought. When we're getting ready to price a property, we actually look at the type of property in that area for months of inventory, just to see how buyer-friendly or seller-friendly a certain neighborhood is. And so, for example, we just went through with some clients in Westminster, and we looked for Vandergrift High School for homes under 3,500 square feet. So it's not just months of inventory in general, it's months of inventory for that type of home, for the type of buyer that would be looking for that type of home. This is the chart that we collect internally at the Berbas Group weekly. This top line is active properties on the market, single family homes within 12 miles from downtown. The second line is pending in the last 30 days. And the blue line at the bottom is what went under contract in the last week. So nothing here too surprising. We expect inventory to be coming down this time of year. We also expect pending contracts to be trending down at this time of the year. Probably another 2 or 3 weeks, those are going to start trending up. That's just my guess. There was 1 week during December that was higher than I had anticipated. 100 homes went under contract. I think it was the week right before Christmas. So that was just kind of unusual. So that's great. If that continues in early January or late January, that'll be fantastic. Right now, this data aligns with the Board of Realtors data, which shows that we have 4.4 months of inventory Austin-wide. But in 2 or 3 weeks, this chart becomes a little bit more crucial because we don't have the Board of Realtors data to see how much inventory is coming to market. So for our sellers, we'll be referencing this chart in the next 2 weeks for the listings that we have coming up on the market. The data that we just looked at tells us where the market was in December, right? Where it was in December versus the previous. But the key question for everybody, buyers and sellers alike, is what direction is the market going? Nobody can really tell you that with any certainty. We get the question all the time, is it a good time to buy or is it a good time to sell? It really depends how long you're going to be there. We don't really think anybody should buy a property if they're going to be there less than 3 years. And if you bought a property a really long time ago, it could be a perfectly acceptable time to sell. Really, it just depends on what the buyer or the seller's goals are. I think about some family of mine that bought 16 years ago. I don't think they remember if they bought at a good time or a bad time. 16 years ago, their house is probably worth triple what it was 16 years ago. So it really just depends on everybody's situation. We dive into the numbers with you and look at the equity that you're pulling out of the property to see if it works for you. How is that money going to be reinvested? Are there life goals associated with pulling that money out of the property? But it's not a one size fits all. It can be a great time to sell for somebody that's owned for a long time, and it can be a terrible time to sell for somebody who's only owned for a few years. So where is the market going? That's going to be determined by mortgage rates and the economy, basically. So let's dive into some mortgage rate charts. There's some things I want to share there with you. So what everybody wants to know is where the market's going. What are the leading indicators? So we always look to mortgage rates for that, right? If mortgage rates, let's say, magically drop to 4% overnight, I anticipate that there would be a lot more buyer demand in the market. Also, especially if that's coupled with some jobs growth. So 6.16 is the national average for the mortgage rates. Locally, though, we have some clients that got locked yet this last week at 5.99%. So that can differ from national numbers to local numbers. So there is a a relationship between mortgage rates and the 10-year Treasury. That relationship from one minus the other kind of vacillates over time. It's a range, and that's kind of like where the nuance of the market demand for mortgage-backed securities is. So there's a lot of components that go into mortgage rates. It's not just the Fed. The Fed is one piece of it. Mortgage rates are not exactly where the 10-year Treasury is. The difference is driven by what the market demand might be for mortgage-backed securities, uncertainty in the market, different things, different risk tolerances for the investors that are purchasing those mortgage-backed securities. And so it kind of vacillates. It has big ranges. You can see here, looking at this chart, that in recent past, it has ranged from like almost 300 basis points, so 3 full percentage points, down to like 1.4. Right now, it's right about 2. It can shift quite a bit. So 60 basis points move in this is not that big of a change. And that means that interest rates for mortgages may come down without really anything happening with the Fed. So it's just something to keep in mind. It's not all Fed driven. I really like to watch what the 10-year traders are watching and what they think at the Chicago Mercantile Exchange. This is called the Fed Watch tool. This shows us that in January, they don't expect any kind of change, obviously. And this says it's going to be 350 to 375 basis points is what the Fed overnight window range is going to be. And for anybody that doesn't know, this is the rate that the Federal Reserve lends money to banks on an overnight basis if they need to borrow money to meet their risk criteria. So we're going to get a new Fed chairman this spring, I think in April. And so what I thought was interesting is let's look forward to June and see what the traders think is going to happen in June. And you can see that 47% of the traders right here, I'm looking at that chart, 47% of the traders think that we will be 25 basis points lower by that time. So whether it's because change in the Fed chair, whether it's because they see that rates should be going down because, I don't know, there's less risk in the U.S. economy, one way or another, they think that there's going to be a 25% basis point drop in the Fed overnight rate, which may, in fact, impact mortgage rates. So for the last 2 years, we've seen price stability. That's basically the summary here. We're not seeing a whole lot of range in pricing. Now, some neighborhoods, I'm actually seeing pricing go up. We had some incredible sales in Hyde Park recently where we actually increased the average price per square foot tremendously on some of our last 2 sales over prices that we've seen in the last 2 years. But overall, Austin metro area, we're seeing price stability in the last 2 years. Thank you guys for spending so much time with us. We appreciate it. I hope you find this valuable. If there's ever anything that you want me to talk about that you have questions about, email us. We would love to include it in our newsletter. If you have a question about something market related or economics related or finance related, that probably means somebody else does too. So if you've watched this far, gee, thanks. And let us know if you have any questions. Talk to you soon. Bye-bye.